The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is Thursday, November 15th, another session of CFRN Thursday where we go over the CFRN setup in slow motion, okay? For the guys that are brand new, the goal or the objective here this afternoon is to give you guys an eyes wide open approach in looking at what's going on with CFRN. Okay. At the end of the trial, you're going to get an offering or an email from CFRN saying, hey, if you want to sign up, here is the price tag. Okay. The goal is to get you, watch the setup, know the setup, get to know the buzzwords. So when you go into the training room in the morning, you understand what's going on. Okay. A lot of things are happening in that 2 hours. That 2 hour window, and a lot of things are going fast, and you get a little bit confused, and then you just, when that happens, you usually just turn it off and forget about it. So the idea is to kind of slow it down, get you ready for the price action and the setup. So when the trial is over, you have your eyes are wide open, and you can make an educated decision on whether you want to push the PayPal button or not. Okay. Those that are returning CFRN members, welcome. You guys are more than welcome to hang out. The good thing about you guys, you'll get to be able to ask questions. You're going to get a little bit more screen time today, get to know the personalities of the markets that we're trading. I'm going to go over some observations throughout the process here, kind of some of the traps that I see people fall into. So hopefully, you guys can avoid them. So that is kind of the goal. All right. New guys, think of this as your CFRN syllabus, first day of class. This is what you can expect. Returning CFRN members, again, this is your opportunity to learn a little bit more before you can get into a live session, or, if you're struggling, this is a great place to ask questions. It's going to be through my eyes. I'm in the room every single day. I'm mostly an observer. I know the setup. The platform that you see here is DT Pro. It's the same platform that Michael and Dwayne use. The indicators are right in front of you. They're coded inside our platform. So it's real easy to install. I created some great videos on how to install it. In the end, you have a problem installing the platform or installing the indicators, you can just call somebody. You can call me, and I can walk you through it. So before I get started, what I have to do is go over the disclaimers. Okay. Again, I don't like to just throw them up and put them back down. What I do like to do is just go over them a little bit. So the first one is basically, this disclaimer really is for those guys that are brand new. Okay. They got an email, or they're getting something on YouTube, they're watching videos about the futures market. Okay. Sometimes you get hypnotized by all the, hey, I can make this kind of money, I can get this kind of return. You get hit in the face all the time with that. Okay. The scoop with futures is this is a leverage game. Okay. So what this disclaimer is meant to do is really for the new guys is to scare you. Okay. And the idea is this: you can lose everything and some in your trading account if you don't have a trading plan, if you're not using stop losses, if you're not watching the market, if you're not watching over your trading account. You just ignore what's going on. You turn your back to your positions, all that stuff. Okay. If you go down that path, that's the disclaimer will hit you right in the face. I've been doing this for almost 25 years, so I've really seen the good, the bad, and the ugly. Okay. we've had some crazy moves in the markets in the last couple of days. All right. Well advertised. Natural gas, the drop in crude, the S&P is whipping around. Those accounts that aren't using stops right now, this thing is hitting them right smack dab in the face again. So I can't stress that enough. If you go down this path, okay, it's very important that you have a plan, that you use protective stops. You're watching over your trading account, because all that marketing stuff that's out on the web here really can hypnotize you, and if you're not paying attention, really can get you in trouble. Okay, so that's why I don't like to put this up and just throw it down and say, hey, I've checked this box for compliance. It really is, it's important. Okay, so I don't like to dismiss it. All right, that's the big thing. The good thing about CFRN is that, let me get rid of my email so they don't keep popping up in front of you. Good thing about CFRN, they have you have a set of rules, right? We got 4 simple rules here. You're always going to be using a stop loss. Okay, here it is, an 8-tick stop loss. Okay, you got to be in front of the screens. Okay, why is that? Because we're going to be executing trades off of a DOM, the depth of market. Okay, if you're brand new, that's what this is here. Okay, this is where we'll execute most of our trades. Okay, right here. All right. So you have to be engaged in what's going on. We're also going to be on a 4-tick range chart. Okay, so we're really looking at the market under a microscope. All right, so you have to be paying attention, and it's rules based. All right, so the fact is, okay, if you're going down this path, CFRN path, great. Okay, you're going to check all those boxes that kind of water down this disclaimer. Okay, in the end, okay, if you do all the right things, you're watching your trading account, you're putting stop losses in, you're engaged in the market, you have a trading plan. If all fails and something does happen in the world and your stops get jumped, because that is a possibility, at least you're in front of the market here, you're in front of the VDOM, and you can just hit this button here, this exit at market and cancel, and get the heck out of Dodge. Okay, this button right here, this hotkey. All right. So, again, that's the long-winded explanation of the disclaimer. And again, I don't like to gloss over it, but it is a reality. I've seen it, so it's nice to talk about it. The second part of the disclaimer is my relationship with CFRN. Okay, there is a division between a line in between me and CFRN. Okay. CFRN is a third-party indicator software trading tool. They're an educator. Okay, they're teaching you their rules. They have a set of indicators, and those indicators are built inside my platform. Okay, this is the platform, DT Pro. The indicators, again, are right in front of you. Okay, so with a few clicks, okay, you can just put the indicators right on. It's not real hard to do. Okay. My role in this is support of the platform, support in getting your indicators running on DT Pro, the brokerage, the execution, the service of that. All that is my department. Okay. If you decide, hey, you raise your hand, I'm going to be a CFRN member. Any of the payments is going to be between you and them, CFRN directly. Anything concerning their website, their members area, their videos, their Thursday night workshops, daily doubles, the Logic 247, all that stuff you're going to coordinate with CFRN directly. Okay, that's how that works out. All right. So they take care of all that, and I take care of basically the platform and that stuff. Okay. The good thing is, as I said earlier, is that I'm in the training room every single morning, so I know the setup. All right. So a lot of guys will ask me and ask questions because they know they can get a hold of me at any point in time. that is one of the big advantages of doing business with me as opposed to maybe Ninja. At least you can pick up the phone and talk to a live body. And the good thing is I know both the platform and I know the setup. So if you have any questions about it, I'm just one phone call away. Okay. That's the big plus. Okay. And that's it. That's our relationship, and that checks off this box here too. Okay. So I said the goal really this afternoon is to go over the rules, okay, in slow motion, and then we'll get into the market, and then we'll cut it up and see what we can do. I will jump inside the DOM. I will place orders. I'll manage the trade, following the rules as Michael would. I'm going to make some observations throughout the course of the hour here. So some things to stay at, mistakes to avoid and potholes to skip over. So we'll cover that. So if you're brand new, feel free to ask questions. This is a good time for it. Okay. So let me open up the question box just in case. The other thing too is this is live. I am manning the phones. So if my phone buzz, I might have to put the group on hold and answer the phone, and then I'll hop back on. Okay. I just don't want you guys thinking that I'm ignoring you. Okay. So if that happens, I'll let you know. All right. So here we go. Let's go with the highlighter. All right. First step is the time frame. As I said earlier, we're on a 4-tick range chart. Okay. So if you have DT Pro, normally someone might be on a time-based chart, right? You might be on an hourly, a daily, or maybe even a 5-minute chart. Okay. We're on a 4-tick range. So we're taking this time frame and we're really putting it under a microscope, as I said earlier. So the way to do that is the time frame is up in the upper left-hand corner of the chart. There's a drop-down box here. Left click on it and select custom. Little box will open up. And select range bar right here. Make that one look like a 4. All right, then hit OK. Okay. Now the chart will really start smoothing out. Okay. What this is, the height of each candle is 4 ticks in height. Okay. So what's going to happen is in the morning in the training room, you're going to hear Michael calling out highs and lows. Okay. This is one way for him to be proactive in placing orders. Okay. What he's doing is he's buying it on momentum and selling it on weakness in a lot of cases. Okay. So he might be buying it above the current market price if the current market price is here, or he might be selling it below the current market price. So if the market goes into a tailspin, he's going to stop himself into the entry. And then if it takes off, he's got an order in there for him to just kind of jump in there and go with the momentum to the upside. Okay. So again, as he's calling off highs and lows, the reason he's doing that and the way he can do that is that he knows that the height of each candle is 4 ticks in height. So he can be proactive. Okay. He can be a little bit of predictive. Okay. So that's one advantage of using the 4-tick range chart. Okay. One pitfall that people fall into really is when they come down to custom here, they'll go right to tick bar and make that 2 and look like a 4. Big difference in what the chart looks like. All right. If it looks goofy like this, you know you're wrong. Just start over. Go to the 4-tick range chart. That little R in parentheses here is the tip off. Okay. That should tell you're on the right time frame, and the chart's smoothing out. Okay. So the first order of business, like I said, was the time frame. That's the 4-tick range chart. Now we're going to go over step 1, okay, which is the bullish or bearish cross. Okay, so here are some of the buzzwords. Okay, some of the things you'll hear in the training room. So this blue and red line is referred to as the MA1. Okay. The green line is referred to as the BBC. That is short for bullish and bearish cross, because that together, that leads us into, again, step number 1, the bullish or bearish cross. So when the MA1 crosses the BBC, as it does here, as I haven't marked, okay, that's a bearish cross. Why is it a bearish cross? Because the MA1 is red. If the MA1 is crossing the BBC and the MA1 is blue, that is a bullish cross. Okay, so now I want you to start thinking about colors, okay? Because in the end, you want everything to line up in the same color. That's going to give you the highest probability setup, okay? So again, this is a bearish cross when the MA1 is red, crossing the BBC. This is a bullish cross. The line is blue, crossing the green line. That's a bullish cross. The one that's highlighted here is a bearish cross. Again, why is that? The MA1 is red. Okay, so we're looking for selling opportunities. Okay, note I didn't say we're going to go short. We're looking for selling opportunities, because what we expect, the normal thing for the market to do after the cross is to gravitate toward that green line, or the BBC. Okay, and that is leading us into step number 2. At some point after the cross, we expect the market to gravitate, flag, or trade up to the BBC. So we're looking for is a touch, as we see here, and a close in the direction of the trend. Okay? We identified the trend as being bearish in this example. Why? Because the MA1 is red. So what you expect to see is a red candle or a down close. Okay? We're looking for a down close. Okay? So after the cross, we expect the market to come back, touch the BBC, and close in the direction of the trend. Okay? Red candle. Why? Because this is a red MA1. If the MA1 was blue, then we would be looking for a up close or a green candle or a blue candle, depending on how your chart is set up. Okay? Again, the common denominator is everything's the same color. Okay? So that is the normal thing for the market to be doing, is to pull back to the BBC. Now, the big question that I get a lot is, hey, why don't you just throw an order in right here and get short? Well, what'll happen is sometimes the market will just plow through it and go up. Okay? So then you're stopped out of the trade. And then you're already disgusted, and you throw everything away. Okay? What you're doing is you're sacrificing price for action. Right? So this down close might be giving you that extra clue that's saying, hey, you know what? We've activated the short side. It did the normal thing. It got back to the BBC, and it closed in the direction of the trend. So it's giving you some clues. Hey, you know what? Maybe we are in the downtrend. All right. So that's step number 2. Pull back to the BBC with the down close. Now what happens is we gravitate our eyes toward the oscillator portion of the chart, which is called the slingshot. Okay, the slingshot. So some more buzzwords here that you'll hear in the training room. This blue and red line is referred to as the cycle. Okay. The green line, well, it's simple. It's just called the green line. Nothing fancy about it. But here's the trip. Okay, here it is. What this is saying is this. The market is in a downtrend. Okay. Notice what I told you guys earlier. I want everything to be the same color. Okay. We got a red, we got a bearish cross, we got a red close here, and now the cycle, that buzzword, is red and pointing down. Okay. That is telling us the trend is down on the 4-tick range chart. And this green line pulling away, all right, is suggesting, you know what? This price action up here, it's just an air pocket in this ongoing downtrend. And with this close here, and with the green line pulling away from the cycle, because the cycle is telling us we're going down, this space in between here is referred to as the divergence that Michael is talking about in the training room. That is step number 3, the divergence. Okay? It's referred to as divergence, separation. The idea is that the cycle, all right, is telling us the direction. We're going down, all right? And this little pull away combined with this price action, which was normal, right, is saying sell it. That's what it's suggesting, okay? And when you filter that all out, really the next course of action is to go inside the DOM here. This is the DOM or the tower where we buy and sell. And we would go in and left click in the red. That's what we would do. We would left click in the red because we are trying to get short. And we make money if the market goes down. If we were getting bullish, and if it's a bullish setup, we'd actually left click in the green. And we make money or dough if the market goes up in our favor. So you're going to be doing a lot of left clicking in the red and the green area inside the depth of market or the DOM. Okay? So that's what that pattern suggests. Okay? So back to the sheet. Step 1 is the cross. MA1 is what color? Red. Normal thing for the market to do. Pull back to the BBC. It does that. Now you're looking for a close in the direction of the trend. What color should the candle be? Red. Our eyes gravitate toward the slingshot. What color is the cycle? Red. So we got a common denominator. Everything is red. The green line is pulling away. It's suggesting the price action up here combined with this action is saying we have divergence or separation. And the next order of business is to go inside the DOM and get short. In the end, what we expect to happen, okay, is for the green line to ultimately come down and touch the cycle or close the gap. Okay, and in doing so, the price action is going to go down in the direction of the trend, and it's at this point when everything touches, we're getting out, we're closing it out. Because what we expect again to happen is the green line to do this over and over and over again until the cycle becomes blue. And then what we want is the green line to be doing this underneath it, creating bullish divergence. Okay, that's what we want. Okay, in an ideal world, we'd be selling this, we would be selling this, we'd be selling this, and we'd be buying dips every time we'd had the divergence. Okay, in a perfect world. All right, so in the end, here's what you're learning if you're brand new. You're not learning to pick the top here. You're not learning to pick the bottom here. Okay, and you're certainly not learning to trade from point A to point Z. What you're learning is to take a piece out of the middle, okay, and take a few points out of the market. Okay, that's what you're signing up for. The wind is at your back. Okay, that's what you're doing, and you're going along with the momentum or the trend. Okay, a lot of scribblies up on the board here, but in the end, that is what you're signing up for. And with every trade has an 8-tick stop attached to it. So if you're brand new, if you're trading the gold and the crude, you're risking $80. That's what that means. If you're dead wrong, okay? If you're trading soybeans, and I didn't skip over, Nicola, I'll get to your question, but that's a good one. If you're trading the beans or the S&P, if you're dead wrong, you're going to lose $100 per contract. Okay? The bottom line is you're going to be using a stop. And along the way, you're going to be using aggressive risk management. And I'm going to show you that. Okay, if we can get involved in a trade here this afternoon, I'm going to put the trade on. I'm going to show you how to place a bracket. I'm going to show you how to trail it. And then hopefully it goes in our favor. We can show you from start to finish. All right. So that's the deal. So in the end, the trade actually, it's all down here, right? It exists down here. That's what's happening. So here we go. A few questions which I like. About 4 bars after the cross, you have a red bar. Is that valid? Okay. Four bars after the cross. After the cross, right here, I'm assuming. It's not a valid, because if our eyes gravitate, it did the normal thing. It got to the BBC and it failed. That's a good eye. Okay? That's what you want to see. But look what we have here. Where is the green line? It's down below. The green line, you want that above. Okay? We want to see this. Okay? We want to see the divergence. So your eyes were in the right place. It was just lacking the divergence. Okay? The market did go down. That's great. Okay? But it wasn't validated. Okay? What helped you is the cycle was red and it had a nice slope to it, right? So that gave you some confidence. You know what? It might still go down, but it was lacking the divergence. Okay? So that's what we're looking for. Hey, Bert, I just wanted to make sure I heard you right. When the green line touches the red line, we exit and buy. What we want to do is we want to get flat. So when the green line pulls away from the cycle, because remember, Mark, this is telling us trend is down. Okay? Red is down, bearish. A blue line is bullish. Okay? When the green line is pulling away, ultimately we're looking for the green line to get into and touch the cycle. And yes, it's at this point we go flat. Okay? Right when this happens. Or you better have your stop at, right on top of the market. Okay? Why is that? Because what we expect to happen is this green line to do this, right? This is what we expect to happen. All right? And price action, okay, should move along with it. Okay? So if you don't take the profit here, there's a likelihood that the market's going to kick back and just stop you out. So why give them the points? Okay? Why give them the extra ticks? So as it closes the gap here, this is where you're exiting the market. Okay? All right, so we'll go over some of that. So you know what? Let me put this down. I'm going to get rid of the live account so I don't. All right. All right, so here we go. We're going to look at the market and a live setting, okay? So first order of business, right? Especially if you are a returning member, the first thing we're looking for is the market trending, right? Is the market making higher highs or lower lows? Okay, that's what we're looking for. So I'm going to go to the crude oil, December crude. Okay, so at first glance, we are making some lower lows, right? So that's good if we're looking for opportunities to get short. What I want you to do, especially in new, I want you to get in the habit of zooming out. See this red button here? When you get in the habit of doing this, okay? Because in the room, okay, you're going to see Mike's charts, right? They're going to be in a magnifying glass, right? So you might see some stuff in full view. You might say, hey, this is trending, okay? But if you zoom out, you can see more the landscape of the market, all right? And you might find some additional support and resistance that you didn't see before, and that might make the difference between you making or losing on a particular trade. So the first observation is to get in the habit of zooming out, okay? That's going to make a difference. That's the first order of business. When people show me their screenshot and they're struggling, usually is because if they would have just done a few left clicks, okay, they would have saw a little bit of support or resistance, they would have probably avoided the trade and avoided a stop out. Okay, so I'm not asking you to go to a 30-minute chart, okay, or a 5-minute chart. All I'm asking you to do is zoom out, okay, this red magnifying glass. Okay, so for the moment, crude is sideways, right? We're sideways. Sideways action. So right now, the crude is off the table, okay? No trades until we start making some lower lows here, okay? All right, let's go to the metals. Let's go to gold, all right? So here, we had the bearish cross, right? That was step number one. At some point, we expect the market to gravitate toward the BBC, okay? Didn't quite get there on that one. It certainly got here, okay? That's that one example where the question I always get is, well, why don't you just put an order and sell it here? Well, this is the reason why. The market's taking off, okay? You want to see it close in the direction of the trend, okay? So the question is, first step, are we trending? Okay, so what we do, get in the habit of doing what? Zooming out. So what I do like is that for a while we were consolidating, right? Look at that. I blew it. I just zoomed out 2 clicks. And what we see is the market is sideways. See, we got some support there. Resistance here. Okay, we're sideways. So the market really isn't trending. This break here was basic. The first time in about 3 hours it showed any hints of a trend. Okay. If you're not sure if we're trending, the dynamic resistance and support will help you along the way. Notice what you're seeing here. They're side by side, right? Okay. If you see this, okay, that's usually an indication that we're trading sideways. Okay. We're trading sideways. So if you're unsure whether we're trending, look at your dynamic support and resistance, and they'll help you out. Okay. And if all fails, if you're not sure at all, just don't do it. Don't buy, don't sell. Wait until it's easy and obvious. Okay? Wait until it's easy and obvious. All right. So for the moment, the gold is sideways. So we're going to skip that one. Okay, let's go to the euro currency. Notice the first thing I do, I zoom out. Are we trending? I'd say yes, we are. Okay? So we are trending. We got some higher highs. So what we're looking for now is step number 1. That exists right there. The MA1 crossed the BBC, and the MA1 is blue. So we're looking for buying opportunities. Okay? That's what we're looking for. The next order of business is for the market to do what? Gravitate toward this BBC. Okay? So we're going to wait for the market to come down before we take any action. Okay? I want you to look kind of fast forward here. Notice how the cycle is blue. All right? And it's got a nice slope to it. All right? So the euro has some potential to the upside. Okay? We just need it to pull back a little bit. Okay? So the market is trending. We have a bullish cross. There's some variables here that suggest, hey, this is a good setup. So we're getting ready to shoot. We're just waiting for the market to get in our crosshairs a little bit, okay? I went to the Swiss franc, okay? Just change the chart on you. Notice the first thing I do, I zoom out, okay? If you look at this, all right, here's ignoring the trending action, okay? bearish cross here, pull back to the BBC with the down close. What color is the cycle? Red. The green line is pulling away. That has all the variables for this market to go down right here on the close of that candle. What do we expect to happen? The green line to come down and close the gap. Along the way, you're moving the stop until you get out. Okay, realistically, you're probably out on this candle. Okay, what's the problem with that setup? Okay, were we trending? We had support here. Okay, we had support here. Okay, no, we weren't trending. Boy, it looks good on paper after the fact. We did go down, but in actuality, we really weren't trending. In fact, I told you to get in the habit of zooming out. 1, 2, oh look. Support here, support here. Well, it's no reason why we're bouncing here. It doesn't surprise me. Okay? So again, get in the habit of zooming out. You'll find a little bit more if you keep looking left. Okay? All right. For the moment, the Swiss franc, again, broke through the BBC, so nothing's going on there. I'm going to check in on the euro. We're waiting for the euro to come down. You're just going to have to wait. All right. Let's go to the indices. Let's try this. I'm going to stick with the S&P. Okay? Here we go. Notice the first thing I do is zoom out. As I said earlier, one clue, dynamic support and resistance side by side. Okay? That's not good market behavior if you're going to try to do this. Okay? So right now, until the S&P starts climbing out of the hole here a little bit, okay, we're sideways. Okay? For the moment, okay, we do have the cross here, so it does look like it's going up. All right? So we'll keep an eye on this. Okay, there's some potential here, but we really want it to get over these highs. Okay, start trading north of this. Okay, notice how we're having a little bit of trouble here. So we'll see. We'll take a look at it. Let me check in on the crude. Okay. Let's try to do something here. Make some observations here. Okay. All right. All right. Did something here. Fast forward here. Okay. I just wanted to get in here to see if I can do something real quick. Well, I was hoping to do it before we get stopped out. All right. I wanted to make a point here. And it happened so fast I didn't get a chance to tell you. All right. So here's another thing that I want you guys to do. After the cross, okay, we expect the market to do what? Gravitate toward the BBC, right? What I want you to do is after the cross, I want you to activate the trend line. I want you to get in the habit of drawing a trend line, okay? The reason is, okay, you never know if the market is going to get down to the BBC or not. If it has so much momentum, okay, and it can't get down to the BBC and breaks your trend line, like it actually does here, okay, then you're going to want to take action because look what we have here. We have a bullish cycle and we have divergence, okay? There is a bullish setup right there. It just went against it, all right? So I want you to do that. So if it happens a few times here, we're going to do that together, okay? So after the cross, next order of business is activate the trend line because I want you to get in the habit of drawing trend lines, okay? So as I look closer, okay, we did have the cross here, all right? This one that backfired, okay? So S&P broke out of that range, correct? Here's a good example of that right here. That's the example. Okay. The market has so much momentum it can't get to the BBC. Okay, here's another one. That's the trend line I would draw. Okay, that's how I would draw that. Off the corner, top of the wick. Okay, and then that would be the close above the trend line right here. Okay, now a few things here to make observation right here. Okay, number one, God, this thing is moving so fast. Okay, that candle there is the close. Do we have divergence? Yes, we do. Okay. The cycle turned color on us, right? So the trend line is required, okay, before we can take action. Okay. So there's two reasons why you're going to draw this trend line. Number one, if this happens here, if the market can't get back to the BBC and takes off, you're already in a position with the trend line to take action. The other reason why you do it is if the cycle turns color on you, as it does here and does here, trades are okay. Okay, that's fine. It waters down the probability. The problem is, okay, again, get in the habit of drawing the trend line regardless, because if the cycle does turn against you, it requires a close above it before you can take action. So if you have the trend line drawn ahead of time, okay, then you're not fumbling wrong trying to get a trend line drawn and then trying to get long inside the DOM. Okay? So get in the habit of drawing a trend line. That's the long-winded explanation of that whole bit. Okay? All right. So let's try to find something. Try to find something else. What triggered us to draw the trend line? What triggered the trend line is anytime you get across. That's what I want you thinking, Mark, and the new guys, or anybody who's in this room. As soon as you get the bullish or bearish cross, I want you to activate that trend line. Okay? All it takes is two candles. Okay? Two candles to draw a trend line. Okay? I look for two red ones or I look for two green ones side by side. Okay? Two red ones. Just like that. Okay? Just like this. Now, new guys, the action that we're seeing now with the slope of the cycle right now would disqualify any long trades at this point. Okay? As I said earlier, ideally what we want to see is everything to be the same color. Okay? We want the cycle to be blue. When it turns red on us like it does here, it starts watering down the probabilities. Okay? If the cycle is red, that's fine. Trades are okay in the direction of the trend. Okay? But if that red line is doing what it's doing now, which is start sloping against you at a 45-degree angle, then all bullish trades are off the table. That is a disqualifier right here. Okay? Because what we expect to happen is the market to do that. Okay? It's supposed to do that. If it doesn't, it doesn't. But it's telling you, it's a warning flag. Hey, you know what? This run that we just had might be running out of strength. Okay? Look, we started back here. We've been in this trend for a pretty long time. So this action here is saying, you know what? Be careful. Don't take any longs. All right. So let's see what happens. Okay? Let's go back to the euro because that thing was rocking and rolling. Okay, the same thing. Okay? I don't know what's going on with the euro, but here we go. This is where we were a few minutes ago. This was the pullback. 2 red candles, Mark. Okay? 2 red candles. 1, 2. This is the close above the downtrend line. Notice how the cycle is blue. Notice how the green line is underneath it. This is the bullish divergence we're looking for. Okay? It's doing it again. 2 red candles. That's how I would draw the trend line. The trend line is required. Why? Because the cycle turned red on us. Okay? You already have it drawn. Okay, so now you're in a position to take action if it takes off here. Okay? Now, what's the problem with this? Okay? We're trending, which is fine. This is starting to curl over. Okay? It's starting to curl over, so that's a problem, right? That's a disqualifier. Okay, we don't want that. We want this action here. Okay? Now, if it qualifies, if it comes up here, I'm going to pop in there and do something. Win, lose, or draw, we're just going to do it because I would like to show you how to get into this thing on the DOM and manage it. Okay? But again, this is watering down the probabilities. Okay? So we're looking for an up close, a green candle. So again, here's something you would hear Michael talk about. If the low is 113.79.5, the high should be 113.81.5. So here's what Michael would do. He would right click in the green at 113.82. Okay? If the low, and it's making a new low, is 113.78, the high should be 113.80. So our new order is now 113.80.5. Okay? So again, this is how Michael can be proactive. Okay? If the low is 113.78, okay? So we are long on the close of this candle right here. I guess I got some slippage, okay, but right here. As I said, let me get rid of sell limit. Okay, so this right here was the close of the candle above the downtrend line. Why did it have to close above the trend line? Because the cycle is red, okay? Now, and this is a problem. Normally, we would not want to take this long because this is curling over in the wrong direction. The reason why I did this, okay, is I wanted to show some action on the DOM, okay? What I did is I right-clicked, I did a buy stop as Michael would do in the training room, okay? In addition to that, okay, I was able to create a bracket order, and for some reason, it didn't work. Boy, this is real good. All right, so I was able to place a bracket order. What DT Pro can do is, with the bracket order, if you left-click this triangle here, top of the DOM, the bottom of the DOM will open up here. If you select buy stop and sell stop, and right-click over buy stop and sell stop and go factor in ticks, if you make that an 8, what it'll do is as soon as you enter the market, it will place a stop loss right behind it. Okay, so that's one less click of a button you have to do. Okay, now, money management rules. If it goes plus 4 ticks in our favor, or it closes on the other side of the MA1, that buzzword, right? That close above the MA1, which is this red line here, we move the stop to break even. Okay, break even. What is that? We would move the stop to where we entered. So worst case scenario, we pay the commission. Okay, the idea with this is to get the risk off the table right away. That's the key. Now, let me tell you ready to call back. So 1 second. Call back, Gary. Call back, bud. Come on. That was Yuri. Okay. All right. So that's what we're waiting for. A close above the MA1 or plus 4 ticks in our favor. So what's happening here? The market is trading a little bit sideways here. That is not surprising. Why is that? Look what's happening here. The cycle is red and it's curling over. That's why this trade is giving us grief. This is what you want to see, ideally. Okay? We want this. We want a blue, okay? Not green, going in the opposite direction. Okay? But for the moment, we have it on because I wanted to show you how to get in the DOM and how to build a bracket. I screwed that up, but in any event, hopefully you got some value out of that. If we get another setup, I'm just going to pop back in there. Okay, we'll do another trade together. All right, while that's kind of rotting away here, let's look at the S&P. As I said earlier, what did we warn you about, right? This. Look what happened. The market went down. Okay? That's why that is very similar to what we're experiencing in the euro. Okay? That is not necessarily good for the home team. But for the moment, it is trying to stage a little bit of a run here, so we'll see what happens. Okay? If it goes plus 4 ticks in our favor, we'll move the stop to break even. All right, let me go back to crude. Okay, notice how I zoom out. We're trading sideways. Look at all the support here. Okay? So right now, nothing to do in the crude. Natural gas, sideways. Notice how dynamic resistance is side by side. Okay? So nothing in the energy sector for the moment. I went back to the euro. Okay, come on, euro. My computer's hung up, so one sec. Waiting for the euro to pop up. As the market moves up in our favor, here's how you would drag the stop. See, this is our stop right here, this number 1. What you would do is you would left click over it and drag it up and release. That's how you would do that. You would drag it up and release it. Okay. There we go, finally. Okay. So we had the close on the other side of the MA1. That's the green candle here, right? So the stop has to go to break even. We're going to get stopped out, but that's the rule. Okay? All right, so again, we identified the euro trending. This is an easy and obvious one, right? We're making higher highs. It has a lot of energy for whatever the reason. As soon as we get that, we engage the trend line. What's normal for the market to do? To gravitate toward the BBC. We get 2 red candles, we start drawing a trend line. Why do we do that? Well, because if this happens, as it does here, we're in a position to take off because it's got so much momentum it can't get that back to the BBC. Again, the other reason why we do it is because if it gets down to here and the cycle starts turning color on us, it requires a close on the other side of the trend line before we can take action, right? So that's why you get ready after the cross to draw a trend line. All right. Warning sign. We identified this as a problem. Okay. It's red, so that waters down the probability already. Number 2, the fact that it's sloping this way actually disqualifies any trades. Okay. That's telling us don't go long. What I did is I went inside the DOM and pushed the button anyways. Okay. The reason I did that, I was hoping to show you how to get long in the euro Okay. By pushing this button here, we can create a bracket. So in other words, as soon as we get into the trade, it puts a stop loss on behind it. With the close right here above the MA1, one of our money management rules, we move the stop to break even, which is our entry price, and the result was stopped out at break even. Is that surprising? No. Why? Because of this. The cycle is red and pointing down. Okay, that's why there's a lot of things to talk about there, but that looks very similar to the S&P and what we talked about up here. All right. So for the moment, I'm standing at parade rest waiting for something to happen. All right. Let's go to see if something's happening in the gold here. Okay. Gold. This might look very bullish, right? Look. 2 red candles after the cross. That is the up close. Okay? That is an up close. The cycle is blue. We like that. We have a green line. We have the bullish separation or divergence, right? We like that also. Okay? What did I say earlier? Get in the habit of zooming out. 1, 2. Oh, look. What's going on over here? We had an old top, and look at the reaction off of that. Maybe this is the reason why this trade is getting a little bit of grief. It's because actually we're bumping up our head against resistance over here. Okay? So, yes, when you put this under a microscope, are we trending? Yeah, it sure looks that way. Again, get in the habit of zooming out. Okay? Now again, if this has an up close, we did touch the BBC. Okay? Now here, follow along. If the low is 1214.60, okay, then 4 ticks would be 1215, right? So what we would do was we would put an order in at 1215.10 and right click. Okay, we touch the BBC and that would be the up close. Okay, again, this is something Michael will do in the trade room. Notice when I have that order in, my bracket is already set, and that will be a stop for us if we get triggered in. Okay, so again, one of the benefits of having the 4 tick range, we know the height of each candle is 4 ticks. So the magic equation is just take the high or the low and add 5 or subtract 5, and that's the number you push. Okay, so if the low is 1214.60 plus 5 is 1215.10, you right click. That's all you have to do. So if the market takes off, it's going to stop us into the trade, and hopefully we go with the momentum here. Okay, so right now I have an order in to get long. What I'm warning you about is what I talked about in the beginning. This is an issue with me. Okay, we're bumping up our head against resistance. This could turn out to be a great trade. Okay, because if we take this MA1 out, we take this high out, because we had some prior resistance here, it could really blast off. Okay, it could really create some energy to the upside. And the fact that the green line is all the way down on the bottom here, and what do we expect the green line to do? Go up into the cycle. This might give us a lot of room to the upside. Okay, so it has a lot of the variables here. My question is, we got to contend against that resistance point. So I have the order in. Okay, see what happens. All right, so while that's sitting, let me just cancel that. Got the order in, so we'll see. I'm going to come back to that. Holy S&P. Okay. Double bottom here. We don't have a new pivot high here. I'd stay clear. There'd have been an opportunity possibly here, but the result would have been break even, so I don't feel bad. Okay. Let's go to the euro. Was really flying here, so okay, the euro is flat, so we're going to do nothing. British pound. Okay. That's how I would draw that trend line. Right like that. Okay. Now, the reason why we draw it because we don't know if it'll get to the BBC. Okay. And the fact that the cycle is turning red on us requires the trend line, right? So we're looking for a close on the other side of the trend line before we get long here. Okay. So let's try that trick that Michael does. The low is 128 even. The high should be 128.04. Okay, as I said earlier, just take the low or the high and add or subtract 5. 128.05, right click. Okay, notice when I do that, because my bracket is activated, the stop loss is behind it. Okay. Again, cycle is red, watering down some of the probability, but at least it's not curling over. Okay, if it started doing this over here, that would be a problem. Okay, so there we are. Oh, looks like gold we're in. All right, so hold on. Let's go back to gold. All right, so that was the gold. So notice how I got in here, and the stop is behind it. Okay, 8 ticks away. All right, so if it goes plus 4 ticks in our favor, we're going to move the stop to our entry. Or if it closes on the other side of the MA1, which is this line here, then we'll move the stop to break even or our entry. Okay, and the trend line was originally drawn like this, so that would have activated along. Okay, the pullback to the BBC with the up close, this also activates along. The only problem, as I said earlier, is all I did was zoom out a few, and this concerns me. Okay. David, call back. I'm in the middle of a webinar. Okay. But we have it on, and we'll see what happens here. Oh, geez. Hey, David, call me back. I'm in the middle of a webinar. Bye. Okay. Sorry about that. As I said, I have phones buzzing here. Okay, so that's the gold. So let's go back to that pound. Waiting for that to qualify. Okay. The trend line there is drawn like this. Okay. Off the tops there, this trend line would have been drawn like this, off the tops like that. Okay. Okay, and the reason why we do this, again, don't know if we'll get back to the BBC. So the close above that trend line forces us to take action. Same thing here. Not only that, the cycle is turning red on us, so it required the trend line. I have the order in right here because the low is 128 even. We add 5. That's our order. Okay. This one looks a little bit better than the gold because I go this way and I really can't find some resistance. Okay. This waters down the probability just a shade, but it's not curling over. So we'll see. We did break dynamic resistance, so we should feel comfortable with that a little bit. Okay. So let's see what happens. Now we're going to watch paint dry, of course. All right, so let's go back to the gold. Gold might be marching here. All right. So not going to do anything yet. Got a little slippage on that. That kind of stinks. But if it goes plus 4 ticks in our favor, so it's got to move one more tick, right? We'll move the stop right to break even. Like I said, this could turn out to be a big trade because if we break through resistance here, we got a lot of space here. Okay. Looks like we're in the British pound too. So we'll go back there too. All right, so let's go back to the pound. Okay, so this is how I drew the trend line. It's like that. Okay. The entry was there. I had the order in at 128.05. I got filled at 07. How do you like them apples? Anyways, it is what it is. Okay. Stop is at break even. Okay. Plus 4 ticks in our favor, right? 128.11. We got in at 07. Expect the green line to get into the cycle, right? That's what we expect to happen. Okay, the green line is getting closer, and now we're getting close to the pivot high. Okay. The market moves 4 ticks in our favor. We move the stop to break even, our entry. We bought it at 07. It's at 16. See how the green line is getting into the cycle? So here's, just trail it. Just trail it right behind it. Okay? See how it's getting closer? So there's what? 9 ticks here. So here, exit at market and cancel. Okay? The entry was here. And the exit was here. The reason is this green line is getting into the cycle. That's why. Okay. So let's go check in on the gold. So actually the gold is just sitting there so we can talk about this. Okay. So this is the British pound. Okay. We had the bullish cross here. First we identified, are we trending? That one was pretty easy and obvious. I zoomed out. I couldn't find anything over here to the left. So that was good. So we had the bullish cross. Come on. Right here. Okay. Next order of business, activate the trend line. Why do we do that? Because we don't know if it'll get back to the BBC. Here's an area here that could have been bought right here. But then there was another opportunity here. We made a higher high. We had a few red candles here, drew the trend line off the tops. This close here kind of lit the match, okay, right here. We had divergence. We needed the trend line because the cycle turned red, so we had a closing on the other side of the trend line. We have the bullish divergence, the green line's underneath it. So basically what we did, we said the low was 128 even. The equation is add 5. So the entry was 128.05. Okay. The market went 4 ticks in our favor, closed on the other side of the MA1 here. And when we got up here, the green line was up here toward the cycle. Okay. And guess what's happening now? It's pulling back. So that's why what I do is if it gets close to it like that, just hit exit at market and cancel. All right. They might say, hey, can we go back to the well? This is how you would draw that trend line again. Would I? No, because we're kind of just making marginal, barely just get over the hump here. So no, I wouldn't go back in there. Okay. All right, so let me get rid of these trend lines. That does not surprise me that we're out of the gold. Let's go back to that. Okay. That was here, right? That was the long entry. And as I said, this is the difference between winning and losing trade here. Zoom out, and I said, uh-oh, this is a problem. And here, this is the good reason why. As a result of bumping its head against this trend line. Okay? So again, I know I labor over this. Just a few clicks makes the difference between this being a winning and losing trade. A lot different, different picture than that pound was, right? Because when I did that, I couldn't see anything. So it gave me some confidence at least to push the button there. Holy smokes, S&P back down again. Okay, I zoomed out. Let's get ready to try to get short here. Good luck with this one. Wow. I would try to get short. It's too fast. I'm not going to be able to teach you guys anything. Let's go to crude. Crude, notice how I zoomed out. We started breaking that support. Now it's game on to the downside with crude. Okay, so now we can look for shorting opportunities in crude. Okay. Okay. Hold on, waiting for crude. Okay. What do? Draw a trend line off the low. Okay. That is the down close. It's required. Why? Because the cycle is blue. Is it a momentum trade? No. Why isn't it? Because we're still above the MA1. Okay, so what that means is you actually don't have to move the stop to break even as soon as it becomes profitable. Okay. Now that's not really a comfortable thing here because look at where dynamic support was right here. So let's see if it can pull back to the BBC and give us a down close. Okay. This is blue. Okay, that's not necessarily good for the home team. The high is 34. Okay. Okay, the low has to be 30. Okay, a down close would be 29. The high, minus 5, 29. That's our entry. I'm selling it on a stop, right? Looking for a down close. A lot of orders there. See that? Anyways, we're trying to get short at 29. We did the normal thing, pull back to the BBC. The high is 34. Subtract 5. Your order is 29. You right-click in the red at 29. If it doesn't have a down close, then we'll take the trade off the table. This is blue, so we really have to have a close on the other side of the trend line. We really don't have a... This is concerning too. Come on, David. All right, 1 second. Hey. Yeah, I know it's tricky. I yeah, I saw that. Yeah, you you might get another run back up to 27, and they might give you another opportunity to short it. So I'd keep an eye on that. I didn't see it going to 35. I'll tell you that much. So yeah, I know. I was watching it. Yeah. All right. Let me call you back. Bye. All right. So it's a little bit after 2 o'clock here. So what I'm going to do is I'm going to pull this order. Okay. So here's a scoop. The takeaways on this. Number 1. Okay. Trending. The market needs to be trending. And one thing that you can do, 2 things actually. Number 1, get in the habit of zooming out. Okay. That's going to tell you a lot. That'll allow you to see left a little bit further to see if you're bumping your head against resistance or support. Okay. As you can see here in the crude, we were back and forth here. Okay. We finally broke it, right? So that tells you a little bit. So get in the habit of doing that. Hitting this red zoom out button. Okay. Number 2, get in the habit of drawing trend lines. You see Michael doing it all the time. As soon as you get the bearish or bullish cross, activate that trend line and get them drawn. Okay. In the beginning, if you're not sure how to draw it, draw them anyways, and then ask questions. Get in the habit of drawing them. The reason we do it, again, we don't know if it'll do the normal thing, which is get back to the BBC. And if the cycle turns color on us, in the middle of drawing it, the trend line is drawn, okay, and it's required. So if the cycle turns color on, you have to draw the trend line anyway. So you might as well get in the habit of drawing it ahead of time, okay? Because if it does break it, you're not fumbling along trying to draw a trend line. All you have to do is push a button inside the DOM. Okay, so get in the habit of doing that. If you don't have the bracket set up already, you better do it. Okay, the less buttons that you're pushing on the DOM, the better off you are. This will create some discipline because it will automatically place the stop for you. All right. I said the reason why I said some, because you can actually, if you really hated stops, you can put the order in and cancel it. But the idea is every trade has an 8-tick stop attached to it. So create the bracket. All right. Disqualifiers. Keep an eye on this cycle. Okay. I think we noticed this up here in crude. You know, if the cycle is the wrong color and sloping against you at a 45-degree angle, all right, we noticed that up here in the S&P. I think oh, heck, you can look at it right here. Fell off a cliff here. Okay, we had the normal thing. We pulled back to the BBC, but look at the slope. It was telling you, look out for a drop here. So look at the color of the cycle and the slope of it. If it's against you at a 45-degree angle, no, do not take the trade. And in the end, okay, when in doubt, just stay out. If you're not sure if it's trending, if you're not sure if that cycle's at a 45-degree angle, if you're fumbling around with a trend line, just don't do the trade. You run a 4-tick range chart, and there's going to be plenty of other opportunities. Okay? So that's my story. I'm sticking to it. So in the morning, I'll be in the background listening to Michael. If he pops out, I'll pop in and maybe make some observations. Okay? If you're brand new, this is a good syllabus for you to use. Okay? We went over the trade setup. Okay? It's the same ones that Michael is going to go over in the training room. We went over a few examples how he gets into trades on stops. Okay? He's getting in on weakness or momentum. Okay? So we went over that a little bit too. Okay? Every Thursday, I'll pop in here for an hour to answer any of your questions. Okay? Will put trades on, win, lose, or draw. I'll put some on just to show you how to put them on and make observations why, hey, you know what, we got to be careful this one. And hopefully we pound enough in your head where, you know, you start to do the right things, all right? Or you start programming your mind to go through a checklist, you know, as you see the market unfold, okay? So that's the scoop, all right? I have it recorded. I have to... whatever I have to do, decode it or whatever I have to do, and then I'll throw it up on YouTube. Okay? So that's it. So next Thursday, I'll be here for another hour. Okay? See you then.